Hello, I'm Lindley Good and welcome back to Money Live and Insurance Innovators special broadcast series, Embracing the Embedded Finance Boom, sponsored by Salesforce. Great to have you with us today. This is episode 2 and we're here to continue the discussion on how embedded finance is transforming financial services and what it means for you. We'll be joined again by a fantastic array of guests from the worlds of banking and insurance, including established players and innovative challengers. They'll show us how to stay ahead in a fast-changing and competitive market, as well as the steps that we all need to take today to prepare. Now, if you missed last week's episode 1, do go back and have a look after we're finished today. It was a great set of discussions with challengers Cover and Rails Bank joining us, and our expert panel sharing their visions around how embedded finance will transform the sector for banks, insurers, and also for customers. So, before we kickstart today's discussion, a reminder that we'd also love to hear from you during our time together. You can share your thoughts and experiences throughout our session using the live chat box on your screen. Okay, let's get underway with a quick hello to Louise Carlander, our commentator and pundit for today's episode. Louise is Financial Services Industry Advisor at Salesforce, and a big thanks to Salesforce for supporting today's episode. We couldn't do it without you. Louise, hello, how are you?
Hi, I'm good. How are you, Lindley?
Very good. It's great to have you with us today and for the next episode too. But today's episode is all about disintermediation, how financial services companies can add value to combat those threats, also create new opportunities. Well, Louise, what for you are the really big disintermediation threats for established players right now, do you feel?
No, but I mean, I think disintermediation is a little bit overplayed. I know they are very cautious of losing the direct customer relationship, but also very much into decreasing margins on their product portfolio. But I think there's a lot of things they can do to, reverse that and actually make this a success.
Yeah, so perhaps you think we emphasize disintermediation a bit too much and the opportunities should really be focused on.
Absolutely. I think it's very much an opportunity play here. I think there's, a lot of things they can do. They just need to get on the wagon and, you can't be late to the party, but the party hasn't left yet. So you just need to be part of the party.
But they are cranking up the music, so get ready. Okay, well, if you, wherever you are in the world, have watched episode 1 already, you'll know about the Salesforce Money Live survey. On disintermediation, 72% of senior industry executives told us that embedded finance will lead to more fragmented and complex financial product portfolios. Probably not surprising, but how can banks, Louise, and insurers stay relevant when things are so dynamic in the marketplace?
I think they need to be fantastic at innovation. I think they need to start thinking outside of the box. And there are a lot of things that they can do to, reverse the threats and increase the margins I said before. I think that, trust is super important. And I think that's the one thing that they really have going for them. Yeah. They have, under so many years, collected all the information of us as customers. They know so much about us, and they can really use that to trust into the different products. I mean, a great example of that is the Nordic banks. They have in different countries done different things, but if we look at Sweden, there is the product called Bank ID, which is the most used app in Sweden. They're also the most important app in Sweden. And out of 10.5 million people that live in Sweden, 8.3 have this app. Yeah. And they use it more than 13 million times every day to log on to the tax register, to pay things, to identify themselves as social services or, anywhere in society. Yeah. And that's built on the knowledge the banks have built over the years.
And clearly customers really are receptive to great products, and the banks have them. I mean, perhaps there's a reputation issue in some countries, and that's been the case for many years, but actually underlying that is a real confidence in what banks do, and insurers too.
Absolutely, and I think that is the thing, that many of these new players also want to partner with the old gang, so to say, to make these new amazing products a reality. The banks have the trust, they also have the balance sheets that many of these companies don't actually have.
That's right. Well, a very positive start. Thanks very much for setting the scene, Louise. Now let's hear from Daniel Globerson, the head of the Bank of APIs at NatWest, who spoke to me a little earlier about what they're doing in open banking, the interaction with embedded finance, and what it all means for banks and for customers too. Dan, great to see you. How are you?
I'm doing fine, Lindley. Thanks for having me.
Great to have you with us. Well, look, can you kick us off by telling us a little bit about the pioneering work that you and NatWest are doing in open banking at the moment? What are you up to?
Yeah, so for us, open banking has always been about not only meeting a regulatory requirement, Lindley, but actually building the bank of the future. And from that perspective, I think we've seen open banking as an opportunity to put the capability in place to connect with customers in channels that we don't necessarily own ourselves, things like embedded finance, to offer business customers direct connectivity, to drive fintech partnerships, Lindley, and the rest. So yeah, there's a lot in flight, and we've got quite a bit going on. I'm looking forward to talking about it.
Well, Bank of the Future is quite a small but a very big term. What are the key things that a Bank of the Future kind of needs to be across? Yes, the use of technology. Yes, the use of data. Yes, looking at things like embedded finance. So what key things for you is the future?
Yeah, it's a great question. I think the future is always hard to predict, but I think we see a future that's increasingly digital. I don't think that's a surprise. I think the pandemic has taken us a fair bit of the way as well in bringing other customer segments into the digital space who maybe perhaps weren't historically as comfortable. So I think that's great. So we've got an expanding customer base that's digital, and that doesn't even include small businesses and the rest. As we look at the gig economy again, we see a massive expansion of the digital economy, and I think that brings the need for connectivity. It brings the need for connectivity, for personalization, the ability to connect with customers in places and ways that we hadn't previously, and our industry hadn't previously. So yeah, the future is bright, the future is exciting, and the future is always unpredictable. But one thing we know is it's far more personalized and it's far more connected.
Yeah, and of course it has a wider view. It has a wider view of what the customers really want, what their outcomes are in life as well as in their personal finance, and that's true of business too. But how for you does open banking interact with embedded finance? How can open banking drive the growth of embedded finance for you, Dan?
I think what's interesting about embedded finance, and when we talk about embedded finance, it's probably worth just maybe a quick thought or two around what does that mean. But I think what we talk about with embedded finance is embedding or creating financial services or exposing financial services in a wide variety of digital experiences, or maybe physical experience as well. But based on our last little discussion point, probably more on the digital side. And so that can be lending, that could be payments, that could be digital ID, that could be a lot of things. And so I think from that perspective, embedded finance is something that's not brand new in itself. We've had things like embedded finance when it comes to card acquiring, right? We go on to e-commerce sites and we buy things, and ordinarily that payment experience, historically that card experience, tend to be an embedded finance experience by a digital acquirer. As we move forward, we're going to see far more of those experiences, and without things like open banking in place, it becomes a huge public works project. The pipes and plumbing become expensive and long delivery timeframes. With open banking in place, most banks have already started to build up capabilities around exposing account information, exposing payment channels. Those are all fuel for embedded finance. Historical transaction data is fuel for helping make credit decisions and confirming income. So in a lending scenario, that's available as just one example. But I think it's that improving trust, that improving connectivity in this digital economy where open banking is the start, but it is fuel for embedded finance for sure, Lindley.
In fact, you could say that without open banking, it's not possible. It's just completely, you can't connect up. You can't get that connectivity that you're after, but also the data will just not work. I wonder, you mentioned trust there for a second, Dan, and I wonder, could trust be more accessible for banks, do you think, with embedded products that actually customers might naturally trust their banking provider, their financial provider, because the product is connected to what they want?
I think there's something to be said for that, Lindley, and I think it's a great question in terms of what is the trust equation for a long established bank. And I think that a fair amount of research across the world, not just in the UK, but across the world, would indicate that although during banking crises and other things, there may have been mixed emotions around the financial services sector. When it comes to trust in data and privacy, financial services ranks at the top. And I think there's something to be said for that, recognizing highly regulated part of the industry, long-standing names that aren't likely to disappear overnight or be acquired or change their business models in a significant way that changes the customer proposition. So I think there is something to be said for banks having the opportunity to become not just relevant, but maybe in some cases preeminent. And I think we're seeing that. We're seeing, some of those, even outside the open banking space, some of those tie-ups in the e-commerce space between banks and some of the world's largest e-commerce sites and the like. I think that it would appear that that long-established names are desirable in that space.
Yeah, absolutely. On a practical level, what do you think embedded finance will look like for customers? How will it hopefully improve our experiences as customers?
Well, I think it goes back to an old statement, which again certainly isn't original and wasn't invented by me, but just the same, I think when we talk about one of the most famous ones is, customers aren't looking for mortgages. People aren't looking for mortgages. They're looking to buy a home. And I think there's a certain reality that there's outcomes and objectives in life that we're all after, and financial services enable that. And I think in that embedded space, that's where we create ideally frictionless experiences to achieve those life outcomes. And I think that's really what's important. And whether it's that life outcome is a personal customer, we always talk about personal customers in the open banking space, but small business, medium business, we're not differentiating here. There's outcomes and objectives we have, and embedded finance might make that just that much easier. Some of the easy examples I'd say, I'm thinking about cash flow management on an accounting platform. That might be the time that you'd want to know, one, what's your real-time cash position, and two, what credit might you have available from your bank or other providers. And I think those are the kinds of spaces where embedded finance allows one to have a better, a more personalized, a more relevant experience, regardless of what channel they're operating in, and ideally the best channel for what one's trying to achieve.
Yeah, there's a lot of thinking needs to be done, isn't there, Dan? Not only about the technical aspects, but also what we're trying to achieve with embedded finance. What are we actually doing as a bank? What do our customers need? In terms of mindset, in terms of thinking about the products that you want to offer, what shift has to happen within banks, do you believe, in order to provide products that are really relevant, that are fit for their purpose and that customers love? What thinking has to be done?
The question of products is always there. I don't think it's just products. I think it's experience, and I think it's reduction of friction. And historically, in all developed markets, there's always been a touch of friction in moving from product to product, provider to provider. And that's where I see the combination of not just open banking, but the expansion into open finance and open everything really in the UK is where we're headed. The combination of that with these embedded journeys can really make a huge difference, Lindley. I think it makes a tremendous difference.
It's not always easy to think about customers in a different way. I wonder what we need to do as banks to improve that customer experience, to really just change the mindset, not only in the products, but also in the way that you think about the customers, or the value that people throughout the organization understand the customers offer to you. I wonder what you feel on that one, and how that sort of flows through the development process.
Yeah, I think it's also a redefinition of the word customer. I think historically, for large banks, one would start talking about customers when by counting current accounts, which in a historical context is great. Large number of current accounts, main bank relationship. Some assumptions, depending on the market and the product type, that those customers may have more products with a given financial institution. Words like primacy come into play. I think when we talk about embedded finance and we talk about experiences which will be in addition to the main bank channels of mobile and online banking and the rest, I think we talk about expanding our definition of customer. And by that I mean, I think we think about any member of the public. So in the UK, 65, 70 million. Any business entity, 5, 10 million small businesses at least. A fair number of corporates. That banks and financial institutions will look at everyone as their customer. The only difference is that customer, quote unquote customer, may not have a product with you yet, or may not have an account with you yet. It's really being able to latch on to real-time data, real-time identity, which then can drive real-time decisioning and real-time provision of products which help customers achieve outcomes in life. So I think there's something to that I think is really, really exciting.
Yeah, let's talk about risks, and then we'll talk about rewards. There are the big risks here. There are in any very large scale new process, new set of products. There's always risk. How do you feel that banks can stay ahead of the curve and really, set the pace really, and be find that advantage in offering something that's really useful to customers? How can we do that?
Yeah, it's probably one of the hardest questions to answer. Again, it's an interesting angle on things. Certainly, I think let's leave banking aside just for a moment. I think, we are still evolving in a digital space around safety. We're still evolving around, do I understand as a member of the public? We're all members of the public. Do I understand where my data is, what it's being used for, by whom, and for what in exchange? Those things we still haven't gotten there on. And, some great stuff coming out. There's, GDPR was a start, albeit it hadn't really addressed consumer engagement. It addressed, making it a little bit difficult for companies that abuse that data trust. But at the same time, it doesn't make it easy for me to see where all my data is located right now.
Yeah.
I think, Australia has done an interesting job with consumer data rights. A lot of different markets are trying to attack this one. From a risk perspective, I think we still have some risks around familiarity of the public with the digital space, a lack of clear identity in the digital space. And these things are all kind of on the way, but there's an evolution there, and these will emerge through time. And sharing of data is very personal, so we certainly don't want to underestimate that. But when we move into the payment space, those are where we do have some risks, because the risks aren't new, but the modes are new. So in the case of an open digital ecosystem with payments and monies moving around, I think all we've done is taken some of those challenges that happen in the physical world and move them more into the digital space. And I think that's one of those things where it's a fine line, Lindley, between how do we as an industry and consumer advocates and government and regulators and big tech, how do we help advise the public on the safety of things without being seen to be, disincentivizing or casting a cynical eye on the opportunity. And that is a fine line, particularly in an environment where the expectation is increased competition.
Yeah, absolutely. But the rewards are there, aren't they? I mean, not only do you have to be part of this, and you have to do it with trust, with consumers, with customers, redefine what a customer is, as you said earlier, but then there is a great opportunity here.
I think there is, and I think there's another side to it. So I think when we've talked about open banking, and we're in the open finance conversations now in full swing, I think when we've talked about this open banking space, we've kind of limited ourselves to the early use cases of things like payments and account data, which is great, by the way. That's a great start. And that's the proverbial tip of an iceberg. That's just going to lead to what I hope will be almost an explosion of open data initiatives here in the UK. So I think that's great. But the one thing we haven't talked about is the role that financial institutions have played historically in trust services. Yeah. Historically, if somebody wanted a guarantee that was you signing a contract, that's a financial institution that did that. That's your bank, for instance. If you were storing assets, physical assets, safe deposit boxes, safe stores of money, and the rest. And I think those trust services are going to come into play as we move forward, because there'll be digital trust services. Who's going to guarantee the identities of those signing digital contracts? That's a good question. I have little doubt there'll be some great answers out there, and that'll help increase the trust quotients, which I think we've probably not paid enough attention to as part of this open banking evolution.
Yeah. It's almost time to go, but let's talk about partnerships as we close up. Look, you can't have a chat about embedded finance without talking about partnerships. Where do we go from here? Because we're going to have to work very closely with non-financial partners, aren't we? Lifestyle partners in many ways. What do we have to do now, do you feel, to build those relationships with our partners, therefore we can give great products to our customers?
Again, a great forward-looking question. I think first and foremost, I believe that various industries, certainly the financial services industry, and as you have pointed out rightly so, the lifestyle industry, need to recognize that there is mutual value in these partnerships. And I think we're already seeing that. Again, we're already seeing some banking tie-ins with either fintechs, which is near and dear to home, or big techs. We've seen that in various countries around the world as well. So I think those partnerships are emerging. I think it's comfort on both sides of how that works. I don't, my view on this is I don't think in most countries that tech companies want to, for instance, become banks. It's the kind of regulation, particularly post-crisis in the banking space, is not something to be scoffed at. And so from that perspective, I think there's going to be a mutual respect and a mutual understanding that we can deliver better outcomes to the public, to our customers, by working through some of these partnerships and just, having a more open mind to them.
Great stuff, Dan. Thanks very much for joining us. Great to have you with us, and thanks for your insights. Really good to have you here.
It's been a real pleasure. Thank you so much for the invite, Lindy.
Thanks very much. Well, thanks very much to Jan for joining us today. That was really great. Let's join our wonderful pundit, Louise, from Salesforce. Well, Louise, in our survey, a whopping 75% of senior industry executives told the Salesforce MoneyLive survey that they expect innovative fintech solutions to reverse the disintermediation threat. Really interesting. How critical for you is it to have the systems in place to manage disintermediation and embrace fintech solutions along the way? What do you think, Louise?
I think it's super important, Lindy. I think that, we can see there's a lot of change coming, but if you don't have your things in order, you're not going to be able to embrace the change. And with the change, you're also going to need to have everyone in your company on board, because it can't just be the business people or the tech people. You also need to have compliance and legal in place, because with the new world, it can take 6 months to onboard a partner. That partnership needs to go within weeks or even days.
Yeah, it's interesting. And you talked earlier on about how, we should really perhaps focus on opportunities rather than the threat of disintermediation. But, that sounds like, it's an entire organization endeavor to make sure that you can overcome disintermediation. Are there people who might stand out and do very well, or is it a mindset or the way you work that might define how you succeed?
I think it's very much a mindset, and the mindset needs to come from the top to the bottom, and make sure that your shareholders, your senior management, your back office people, your customer service representatives are all on board on the journey that you're doing, and also are very communicative on how you do things. And one really funny example is that, and I'm from Sweden, so it's easy to bring, Swedish examples, but when the Swedish banks launched a product called Swish, which is a P2P payment app that everybody uses here now. It's really changed the market on how you do small payments and go to the coffee shops with your friends. They did it for free as a test. But then the consumers started calling the customer service agents and said, is this going to be, when are you ever going to charge for this? And the customer service agents tells the consumers, well, no, it's always going to be free. How do you do it then when the customer service agents has told all the customers, and it's gone out in the market saying, the consumer will never have to pay for it. And you can buy a car if you really want to.
And that highlights the importance of the partnerships and the collaboration, the working relationships that you need to have in place as well. Louise, thanks very much indeed. We'll come back to you again after our next session, which is our expert panel discussion focused this time on disintermediation. Great to have you with us again. Three familiar faces who you'll have met in episode 1. First of all, Jana Winter. Hello, Jana. How are you today?
I'm very well. Great to be back.
Good to see you again. Jana is the Chief Information Officer for Generali UK and for Generali Corporate and Commercial. She's a strategy and technology expert with extensive IT experience, and she successfully bridged the gap between business strategies and IT organizations. And Jana has an established reputation in leading and delivering large-scale transformations. Jana, great to have you with us again. Second of all, we have Dr. Evangelos Avramakis. Evangelos, how are you?
I'm very fine. Thanks for having me again. Thank you.
Great to have you back with us. Evangelos is the head of digital ecosystems R&D at the Swiss Re Institute and an internationally renowned advisor and thought leader in insurance. His particular focus is on forward-looking market developments, digital ecosystems, omni-channel management, and innovative business models. Great to have you back with us. And last but not least, Petter Lee Johannesson. Great to have you back with us. Petter, how are you?
Great. Thank you. Thank you for having me.
Great to have you here. Peter is the head of strategic partnerships at DNB, and DNB is the largest financial institution in Norway and second biggest in the Nordic region. Peter's team execute partnerships primarily with fintechs, but also bigger corporates, including Google. And Peter's team also run the DNB Accelerator, focused on venture investments and key accounts for DNB partners. Great to have you all with us back again. Well, let's start off. I'll throw this to Evangelos first of all, if that's okay. Big question, small question, big question. How significant is the disintermediation threat from embedded finance? Evangelos, kick us off.
So disintermediation happens all over the sector. So it's not only valid to the insurance environment. So it happens everywhere. So the only question is, how do you get prepared to that? Because it will require you to think about it in a different way. What we saw so far, this is in mobility, let's say the classic platforms. You see the platforms that are connecting this demand and supply side in a very direct way, but they disintermediate a lot of additional kind of brokers, partners, whoever. And this kind of environment just happens all over. And the question for us will be, how do we get prepared to that one? So it's not something we should be afraid of. It just happens. The question is, how do we adopt? That's the question.
Absolutely. Peter, look, every threat has an opposite side, which is opportunity, I suppose. It's a positive way of looking at things. So, threat or opportunity?
I think it's an opportunity for us. And the way we should look at it is it's a new distribution channel. So as long as we can own the product, we can have a branding there. We own the customer, and then I think we will be fine.
Yeah.
I would like to exactly, because exactly as Evangelos was saying, is here, is happening. We need to be better prepared. But actually, a very good mechanism is to get even closer to our distributors, to work even better with them, to provide them even better services, even cheaper services. So yes, we just adapt and take it as an opportunity. Absolutely.
Yeah. A threat today, opportunity tomorrow, I suppose, would be an effective way of phrasing it. But a particular area of concern is around data and customer relationships. 64% of senior industry executives in the Salesforce MoneyLive survey said that they're seriously concerned that embedded finance could end direct customer relationships. Now, that's always the question. It's been an eternal question. So how can financial services companies ensure that they continue to own that relationship and the data comes with it? Evangelos, how can you stay close to your customers while also perhaps having your products fragmented or being part of other products that the customers do care about?
It's an interesting perspective that the whole financial service environment wants to own the relationship all over. So within the last century, we own the relationship. We know exactly whom to partner with. So some brokers, but also some direct relationship. And now apparently this given paradigm changes. And we perceive it as a threat instead of thinking about, if this is a distribution channel, how can we add value to that distribution channel by similarly keeping our existing relationships and make them even more sticky. So it's actually to work on both sides. And I think it just requires two different strategies. One is, how can we provide more value to the existing relationship? And potentially, it's not only about risk transfer, so potentially we need to think beyond that. And the other would be, how do we stay connected with changing customer behavior, that we stay relevant in this new paradigm called now embedded insurance or embedded something or ecosystem. And this is just a natural thing to do.
Yeah. Peter, in our last episode, you talked about how, DNB is using software and systems from other companies, for example, Amazon, to deliver what you do. So, I mean, there's a certain amount of white labeling where that company would hide behind what you do, but also then you are known for other things too. So I suppose you don't just vanish from the relationship. You are known for delivering what you deliver best and then being part of that ecosystem.
Yeah, exactly. And I don't mean that we are closing our eyes and going blindfolded in here. We definitely are pairing the part where we become commoditized, where the partner would have a marketplace and we would be just one financial provider plugged into a forefront. But what you are referring to is actually not a partnership that we are doing, but it's ING, where we're using the data from Amazon. You can use the data from Amazon to create good credit scoring, and then you still sell the product through Amazon to their customer with their data, and have still the branding and the customer relationship.
Jana, I wonder whether there's a different challenge for insurers than there is for banks, because insurance almost naturally feels that it would lean itself to being embedded, being part of a product choice by a customer. But is that not true? I mean, how does it work?
Let's go off from basics. And I'm talking this time specifically retail insurance. I would like to be insured as an individual for all of the possibilities, but I really don't want to have a claim event.
Right.
So I would like to be insured, but I don't want to have a claim, because that means I have had an incident of a kind.
Yeah.
So it's quite different to banking, because with banking, I go to the shop every day, or online shopping, I pay my bills, I get my salary into the bank. So banking is part of my everyday existence. Insurance is not.
Yeah.
And this is why it's a different dynamics. And I have worked in banking before I came to Generali. I can see the difference between the two. But so this is why we're talking about disintermediation. I mean, we have had this conversation for the last 20 years. The Amazons of the world will come and have our breakfast. It's not happening. Now, whether it's banking, whether it's insurance, we have our right place in the humans' lives, whether it's once a year, never in the sense of claims. But again, so from we need to be at the right time, at the right place. Yeah. We need to be prepared. That's why for retail, we're not seeing that in disintermediation yet.
Yeah, and again, I don't want to be too positive. I know we all have our fears, and clearly, when there's a business at stake, that is incredibly important. But disintermediation is also a different way of looking at integration. And I think from what Peter said there, if you may not be the front of every single interaction, but you will be integrated into that operation, that transaction, that relationship.
I think one point here as well is, yeah, you can do different things, right? So for us, we realized that, for example, for the ERP and the accounting systems, that's for loans to small corporates, that's a better surface than us. And there we actually moved into that business as well, and now are our accounting provider and selling loans through that surface. So you can also take those kind of steps to position yourself to actually be the forefront as well.
As the services become embedded into non-financial products, how could customer experiences change? I guess there are two things really: customer expectations and experiences. Evangelos, do you see a fundamental shift in the experiences? Are we talking about perhaps invisible services or frictionless services? How might our experiences change?
It's very interesting. Like 10 years ago, nobody was talking about customer experience, and now it's at the top of everybody. But I think we still have an inside-out view when we look at the customer experience per se. So our business is not known for being well done on the customer experience front. So we might have some great sales points, right, where we do the kind of advice, and then we have some great claims experiences sometimes, and in between nothing happens. Yeah. So we are very, really bad to keep on a continuous relationship with the customer, because actually it matters only the selling part and the claiming part, and everything else is just omitted. Yeah. The new business models that are entering do increase the frequency and engagement with the customer. So you have high frequency kind of services and products with low margins, and all business is a low frequency and high margin business. So it contradicts actually. And we need to get used that we can do both things at the same time. One is to keep up a relationship to make it even sticky, but then we need to extend the value proposition. It's not going to be enough. Engagement and loyalty is a completely different animal. Or the other things, what we need to understand the new touch points, the new distribution channels, in order to serve those customers on their platforms even much better than we did before.
Yeah. And what do you think about that? Let's put ourselves in the position of, because we are either individual customers or business customers. You know, what would we want from customer experience? I think yes, good value, yes, of course, but you know, slick service, pretty seamless, very comprehensive. I mean, those things have always been the case. There's not really much of a change here, except perhaps as a customer, I'm focused on what I'm buying into rather than perhaps the insurance that I take out.
So two things. I like Evangelos' explanation about the frequency and the value, whether it's low, high, or high, low. So let's be controversial. Maybe sometimes we want to be completely invisible. Maybe. Again, do we want to say, dear customer, you have an insurance with us, we'll come and remind you once a week, every week, 52 times a year? Or do we want to say, we're here, we're solid, we're stable. Should you have a claim, you will have smooth experience. You're not going to panic. So again, owning that relationship, it doesn't mean we need to be in your face all the time.
Yeah.
And the other thing that is also crossing my mind, just again, as part of this conversation, is customer experience. Absolutely. The moment we're going into a 3-year transformation in one of my businesses, and the main reason for that is customer experience. But controversially, is the customer experience within the company. We're talking about a company that operates in 20 countries, various languages, multinational programs for insurance, how complex corporate operating all over the world gets insured by Generali all over the world for multiple lines of business. That many puzzle is complex. And the customer experience at the moment is how can our own business people not get lost in the billions of systems they need to use. Okay, not billions, multiple systems they need to use.
Yeah, if it's billions, yes, there needs to be a restructure, but I think you're okay without the billions.
Maybe fewer than billion, yeah.
Let's talk about data. We've got a few minutes left. What role, and I'll throw this to Peter if you're okay with that, what role do you think third-party data, well, it already is playing a lot of a role, but will play, particularly in terms of personalization?
Yeah, I think that will have a huge impact on how we operate as a bank. But also the other way around. I think the data that the banks have can wildly increase the products that other people have. So the transaction data that the bank's sitting on, it's very valuable data for a lot of industries as well. So I think this goes both ways, definitely. But for us, for credit scoring, and definitely partner data from embedded services could have a huge impact, and also for the retail market.
Do you think there's going to be a time when third-party data becomes like the prominent type of data used? Because if this is a very interesting area where the feedback that you get from the product that you're attached to will absolutely inform you into how you're offering it to other people immediately.
Sure. I mean, look at our business. So far, we did some underwriting decision based on past data. So we looked into the history, especially on the claim side, and have frequency and severity, and tried to come up with a logical kind of framework. In the future, we'll have more insights coming from outside data sources. I think relative or relevant data source and contextual information that could explain the exposure, the risk exposure, in a much better way. So we need to take this into consideration and say, oh, by the way, it's not the same way like we did it in the past. We need to adopt the way we produce, the way we engineer products, but also the way we underwrite, and so the whole value chain. So it's becoming new standards. So it's not something, let's say, transformational. It's just part of the future insurance proposition that you need to take this into consideration.
Yeah.
The only thing is, can you scale? If you cannot scale in that environment, it's going to be a very tough game to play.
Absolutely. Final question. We spoke in episode 1 about the impact of embedded finance on incumbent players, and so with many more digital challenges and all of this disintermediation, maybe Jana, I'll throw it to you. What role do you think incumbents have to play in this much more complex ecosystem?
We need to adapt for this flexibility, and again, just to have that citizen approach, say we have something that will be of use to the market, even maybe beyond our immediate financial interests. But and also on the data, I was listening to Evangelos' explanation about how we can keep using the data. I mean, very standard approaches, Dun and Bradstreet data for corporate data. Absolutely. We trust it. We have been using it for many years. But another more modern example is, new example is using Google Maps data. If someone is trying to insure a building, and you can use the Google Maps data with the visuals to realize it's not a 20 floors, it's only a 3-floor building, or the other way around. Maybe something is not quite right. So again, to have that flexibility to use information, to provide information, and this whole thing of whether we can trust each other is survival of the fittest. There are so many times you will use some data from an outside source, you will fail, and I say, thank you very much, source, not going to use you anymore. But so incumbents, actually, I take pride in being working for an incumbent, because it means that it has the scale, it has the complexity, it has the solutions there. It's a question of just not keeping up to speed and taking advantage of all of the innovation that's happening outside as well.
Absolutely. Well, thank you very much to our wonderful panel again for episode 2, and they'll be rejoining us next week, next episode, to talk about the crucial topic of APIs and how to build the right capabilities for embedded finance, from staff to technology. But let's round up today's discussion with our panelist and pundit, Louise. Louise, welcome back. Look, what advice would you give to anyone who's now focusing on the threat, if it is a threat, of disintermediation?
I would absolutely say stop focusing on the threat and see it as an opportunity, and see what you can do to embrace this change and how you can improve your consumer experience, or the customer experience, because it's not just the consumer, it's also the corporates. But I think that we can see that the incoming players in this is very focused on the consumer, because that's the easy part to fix. The corporates is always lagging behind because it's much of a harder nut to crack.
Absolutely. But it's so important to focus on the consumer need. That always was the case, but particularly now, and this is a route to that. Clearly, technology does play a key role. And next week, we will be hearing from the head of Deutsche Bank's API program, plus the insurance innovator Cover Genius. They'll tell us about how to turn the possibilities of embedded finance into reality. And our expert panel, of course, will be here to unlock the right capabilities going forward. But for you, Louise, could you just give us a little teaser? What are the key capabilities that financial services businesses should be focusing on right now, do you think?
I mean, I think they should look at distribution partnerships. Who should they partner with? How should they do it? But also, how can they deliver their service as banking as a service or insurance as a service, to be a platform provider, and maybe not just have their own brand name out there, but being the rails and underlying opportunity to make sure that they fuel the rail, the technology for making this happen.
Yeah, and really be part of it. Get out in front of it and work very hard to make sure that your systems are working, that you have this customer view. Anything else that's today? What should I do? What should I look at? Do you think, Louise?
No, but I think a lot of them have talked about, we're not a bank anymore, we're a technology company with a banking license. Well, if that's what you're thinking you are, and I would say I don't think most of the people saying that aren't that today, but then, I think you should look around and, see where is the fastest possibility of you to get the technology you need to lead the change. And building it yourself might not be the best way of doing it, rather than, partnering, finding innovative solutions that you can use as a whole or part of it to really fast fuel your innovation.
Absolutely. Thanks very much indeed, Louise. It's been lovely to have you with us. We'll see you again next week. And that is about it for this episode. A huge thanks again to all of our contributors today. Next week, our stellar lineup will include Deutsche Bank talking about their API program. We'll have Cover Genius explaining their insurance innovations. Also, our panel will place the final piece into the embedded finance puzzle. How do we actually make it all happen? In the meantime, please do send us your feedback by filling out the review form on the webpage. And of course, if you liked our broadcast, spread the word, share the page with your colleagues, your partners, and your friends too. But it's time to go. Take care. We'll see you next week. Until then, all the best.